Welcome to Loup TV. Today we will be talking about Apple's March quarter. I'm Becca. You probably don't know who I am. I work in content at Loup. And Jean, so excited to be here with you today. You've been through a lot of Apple's earnings. What is on your mind after yesterday's call?
Well, first, it was a remarkable quarter. They grew revenue at 9%. The street expectation was for 4% growth. And what makes it a remarkable quarter was two things. First is the comp that they were going against, what they grew at in March of 2021. They had 53% growth. For Apple standards, that is a huge growth number. And the reason why it was such a big growth number back in March of 2021 was they had shifted the timing of the iPhone more into that March quarter. A lot of that iPhone revenue got pushed into the March quarter, which made a difficult comp. So you have this growth piece, but it also is with the backdrop of what's going on with the global macro, some concern around consumer spending. We saw Amazon report that their retail was down 3% year over year. They guided it down 6% for the June quarter. And so you have this macro softening of the consumer. You also lost about a percent of revenue to Russia. They shut down Russia at the beginning of the month of March. So they lost a month of revenue from Russia. And so you put all that together, it really was a remarkable quarter, and investors aren't quite giving them the credit that they want to for it. Different topic, but there's an underlying question about what is going on, what is driving that. And at the core, it is this accelerating digital transformation. It's this work and learn hybrid approach where tech continues to move down from corporations into individuals taking a bigger responsibility. And when we think about all these companies that have had this big boost because of the pandemic, and then we're seeing them all come off. I mean, you look at what's happened with some of Facebook's numbers and Netflix and Amazon. But in Apple's case, they're actually showing that they're seeing some sustaining beyond what's happened with the pandemic. So that was what was top of mind for me related to the March quarter.
Supply constraints, the buzzword of the past year. It seems like Apple's been talking about that for the last 5 quarters, maybe. What should we know about what's going on there?
Well, if you'd probably ask 25 investors, I bet 23 would say what's on their mind. It's the supply constraints. I wanted to I think it's important that we start with really how the core fundamentals of the business are, but the supply constraint topic is important. And just to put it into context, is Apple has had supply constraint issues for the last 15 years, really since 20 years, since the iPod came out. When a new product comes out, they're typically supply constrained for 2 to 4 months. So that's nothing new. And investors have done a great job of being able to take that commentary when a specific product has supply constraints, and to be able to adjust that and interpret what the underlying demand is. Because when you have supply constraints, the reported number doesn't reflect what the underlying demand is. Mm-hmm. And in the case of what's happened more recently, you're exactly right. 5 quarters, it was, to be exact, it was 4 quarters ago, the language around the supply constraint topic shifted, and Luca, their CFO, when they reported their March 2021 quarter, and was giving guidance essentially for June of 2021, he talked about a $3 to $4 billion impact, kind of across the broader business from supply constraints, and that really was a one-time mention in their prepared remarks around supply constraint, and that really opened up what has been Pandora's box related to supply constraint, and investors are quite focused on it most recently. But we had to put in a context, as this has been an intense topic on the Apple story for the past year. And I've gone back and looked at the number of times that they've talked about it. So as I mentioned when they reported the March quarter a year ago, they mentioned it one time, and then the subsequent quarter went up to 5, and then the last 3 quarters, it's been 9 times each. In their prepared remarks, they're talking about supply constraints. It's actually become part of their boilerplate. And if you go back and look at the quotes from quarter to quarter, you can just see how when they talk about the iPhone, they put there, it would have been better if not for a supply constraint. And so I do want to mention one other piece to it is that just because we're talking about it doesn't mean that it's getting better or worse. In fact, the issue is becoming more intense for Apple. And to put it in perspective, as I mentioned, a year ago, they guided a $3 to $4 billion impact from the supply chain. And this quarter for the quarter, June quarter this year, they're thinking that that's a $4 to $8 billion number. And so when you look at that as a percentage of revenue, essentially a year ago, they expected to lose about 4% of the June quarter to the supply constraints. Now this quarter, they're going to lose about 7%. And so the magnitude of it is getting more intense, and that is predominantly because some of the recent shutdowns in China.
Do you perceive that the supply chain issue will go away? Will it ever go away? And separately, how did China do in the quarter?
Well, the reason why the supply chain issue is not going to go away, we're always going to have it again, but this you're talking about kind of the more acute piece here. I think we're going to have it for a long time. Tim Cook was asked on the call about that. He didn't have an answer. Too many factors. He had the right answer, saying I don't have an answer because there's just too many factors going on for him to be able to predict when that supply is going to improve. My guess is it's probably late this year, early next year. We're going to start to see some improvement on that, but it doesn't change I think what I believe is the reality that Apple investors should just get comfortable with this being kind of part of the story of part of the discipline of investing in Apple is understanding that we're going to have these supply constraints. And it's similar to what we saw around how they would manage inventory channel in the inventory, move that up and down, and that would have an impact on how investors kind of viewed the quarter. And we just got good at it after time. And so to answer your question is that this is something that you need to just get comfortable with. I need to get comfortable with. And the reason why we need to get comfortable with is because the demand is strong. And that's another important piece here is that they reiterated several times on the call that the demand is strong. The reason why the supply is big, is supply constraints are meaningful is that demand is so strong. And I think that because they make, I believe, their mission about products that enrich people's lives, and I think they make great products, and I think that's what is standing up here. And because as they continue to make those great products, I think they're going to have a lot of demand for it, and I think it's going to be hard for them to catch up. So buckle up. We're going to have a few more quarters of this. Oh, and then you mentioned China too. I didn't answer your question. China was up about 4% year over year, surprisingly good. I think the expectations were that it was going to be down a little bit. It was up 21% in the December quarter off an easy comp. So I would kind of put the kind of health of China as kind of bouncing around here. I would say that it really isn't an upward trend or a downward trend. It's kind of stable, bouncing around.
And takeaway is again that Apple demand is strong. What has the impact of exiting Russia been on the entire business?
So it's probably going to be about 2%, 1.5% to 2%. They did talk about that on the call, and that does, and that's in terms of that takes away 1 to 2% of the overall growth. I think that that is a negative for the next few quarters, but of course, once we've anniversaried that, or once I think you get towards the later part of this year, investors start to look at some of the easy comps around that. I think it's going to be favorable. But to answer your question, is that it is. It's small, it's manageable, and I think investors are largely, it's at least what's going on there is not an afterthought for investors, but I think the impact to Apple's business is largely an afterthought.
Beyond the March quarter, what do we have to look forward to for Apple this year? What is of note?
Well, we at Loup, we always talk about profiting from where the world is going, and where the world is going this year, at least for in Apple's case. I think you are going to hear more chatter about this mixed reality headset. We may see something, at least more talk of it as early as the developers conference this summer. But it's going to be a pretty low-key year, I think, overall. I expect that headset is going to see some sort of a demo, something that people can put their hands on, probably not until next year. And so this is kind of still a time where they're just making incremental improvements to the products. They've got strong demand because of this accelerating digital transformation. I think that's what 2022 is going to be about from a product standpoint. From a stock standpoint, it's going to be kind of baselining those growth rates back to kind of more normalized levels. And beyond that, it gets, I think, much more exciting too, is I still believe that they're going to continue to make a run at a car. I don't have anything up to date from this last quarter about how that progress is going, and doesn't mean that they're actually a car is going to see the light of day. But if in fact they do get into the auto business, I think that would be a significant impact to Apple's business. Just think about the size of the business they could. With 15% market share in auto, Tesla right now has called 30% in electric. If Apple got 15, I don't know if that's the right number, but they got 15%, that could double their overall business. So there's some pretty big levers that they can pull. And when we think about where the world is going, that's the piece that I'm most focused on, is what is going to happen with auto.
See you next time, Loup TV.